Alright, hello everybody. Welcome to another video. In this video, we're going to cover my one setup for life. What is it? What's my bread and butter setup? What's the one setup if I had to rely on for the rest of my life, I would pick this setup. And this is it. So we're going to go over the text and talk and get into the details of what this model or this setup consists of. So the one setup for life, what do I look for? We're going to talk about the setup only. We're going to ignore bias. We're going to ignore draws, whatever it may be. We're going to just focus on the setup itself. What is requirement number one? Number one, 50-minute sweep of liquidity. That means a high or low, a significant high or low gets swept. Swing high like this, swing low like this, swing low like this, swing high like this. Some significant high or low gets swept. That is requirement number one. Then, number two, this is optional. It's not necessary, but it adds confluence. A 50-minute imbalance. So, for example, if we sweep buy-side liquidity, let's say we were to sweep a high here, and we have an imbalance, a bearish imbalance, resting right above it. This for price adds confluence. So instead of just sweeping a high, we're sweeping a high and coming into a bearish imbalance on the 15-minute before making a move to the downside. That adds confluence to the setup, and vice versa for longs. Then once that is complete, you want to measure the dealing range. Specifically premium/discount, where price is relative to that dealing range. And so I have a video going into dealing range. If you want to dive into it, you can go check the video out. I'm just going to keep it at that. I want to be as brief and as straight to the point as possible. If everything there is coordinated, that's when I go to the lower time frame. I want to see a lower time frame reversal plus break of structure. I want to see price reverse and break structure. Now, if there's a change in the state, that adds more confluence. Typically, what will come with that is that you might get a later entry, so a break of structure is just fine. And then, upon that break of structure, you want a PD array entry that is in the premium or discount relative to going long or short. And that PD array entry must be back past liquidity swept. So those are the 5 steps. What does this mean? Back past liquidity swept. So if we sweep this high right here, let's say there's an imaginary high right here, and price sweeps it like here. Well, the short wouldn't come when the wick is here or price is here. We want shorts to come back past the liquidity swept. So it sweeps, comes back past it, and then you take your short. You look for your entry there rather than above, and vice versa for longs. So let's get into this one setup for life. What are we seeing on the charts right here? What is price doing to this point? We're in that AM session, and let's observe right here. What does price do? We sweep sell side right here, sell side liquidity right there. So that's step one. And then what do you notice here? We have a 50-minute bullish fair value gap simultaneously aligned with that sell side sweep. And so that's step 1 and 2. Even 2 being optional, it adds confluence. Step 1 and 2 is met. What's the dealing range? Well, this high swept liquidity here to this point, so you mark this high, and this low swept liquidity right here. So there's your dealing range. Longs are valid anywhere below the 0.5 level. That's where the optimal longs will come in. And so from this point, we go to the lower time frame, because steps 1 to 3 are all met. And on the 50-minute, on the lower time frame, price can deviate outside of this 50-minute bullish gap, but on the 15-minute, you'll see that it does respect it. And so I look and I say, okay, are there objectives to the upside? Look at these highs here. Look at all these highs on the 1 minute that we've generated. All the liquidity we've generated and left behind. So there is reason to expect price to come higher. And so optimal longs will be anywhere below this 0.5 level. Right here. So this is the discount of dealing range. So optimal longs will take place here. What do we mark out? Opposing liquidity right here. Here we have buy side. And then you can take partials at some of these highs. Dealing range midpoint if you'd like. There are areas where you can take partials along the way. And so like I said, optimal longs will take place in this point. So I'm going to remove this range. Optimal longs will take place here. And ideally back past the sell side swept. So ideally, if we sweep this low here, we'll come right back past it and the entry will form somewhere here. That's where you'll find the optimal entry. So now I've given you the requirements of the setup and where exactly I want to find the entry and why and what to target. What to target and why you should target it, given this liquidity. And so what do we see here now? Steps 1, 2, 3 are met. Step 4, lower time frame reversal here. Where's that minor swing high? We have this one right here. That is where you can see your break of structure. And what do? The wick is enough for me to deem a break of structure. We break above this swing high, that minor swing high, and we form two bullish gaps. We have gap here and fair value gap right here. So to recap, like I said, step 1, 2, 3 are met. 4, lower time frame reversal, break of structure here. 4 is met, and 5, PD array entry. Here's your gaps right here. Back past liquidity swept. Steps 1 to 5 are all met, and there's reason to expect price to head higher. There are objectives to the upside, and we're in that discount of that dealing range. So this is the one setup for life. This is the optimal setup. So you enter at the retest of the gap, stop below the low, and you target the opposing liquidity. And that is exactly the setup that I look for, day in and day out. If I had to pick one setup to rely on for the rest of my life, it would be this one without a doubt. Almost a 3-to-1 R. There's our entry, price retests the gap. Entry there, target the opposing liquidity. Let's move it a bit more here. Price begins to move to the upside. Still buy side right here. And there we go. 132 points almost to that buy side liquidity. Utilizing that one setup for life. This is the setup I would pick time and time again if I had to rely on one setup. It happens every single day. And it's there for the taking. And so you're to locate this and take advantage of this one setup for life. Alright, so here's another example of this one setup for life, showing you the visuals of this setup and exactly what to look for in the charts. So again, if I had to pick one setup, it would be this for the rest of my life. We're in the AM session. What are we seeing price do to this point? Price comes down and sweeps sell side right here. Sweeps this low right here. We have a sweep of sell side liquidity right here in the AM session. What else do you notice? A 50-minute bullish gap that has been respected time and time again and still is holding to this point. So steps 1 and 2 right off the bat are met. Dealing range. This high swept these highs here. This low swept these lows here. So there is your dealing range. Optimal longs will take place below the midpoint. So anywhere below here. So steps 1 to 3 right off the bat, steps 1 to 3 are met. So this is where we go to the lower time frame and see if we get the optimal setup. And so we have opposing liquidity here. That is a potential draw for price as well, that we're going to mark out. And if you go on the lower time frame, do we have reason to believe that price would gravitate to this point? Well, if you look right off the bat, first let me mark out the discount of dealing range. Anything below this midpoint right here is an optimal long to take because it's in the discount of this dealing range. And so that's where your optimal longs will take place. So here we are, anything in this point here. So I'm going to remove the range for that sake. We have the area where optimal longs will take place. And so do we have reason to believe price would come to this high? And the answer is yes. although that is a draw for price itself, and although the bias may be bullish, what else do we have? Well, if you look on the lower time frame, what do we have right here? Equal highs right here on the 1 minute. Clear and obvious. 1 minute equal highs. And to support that further, look at all of this liquidity here. Look at all of these highs untouched. All the way here. All of this generated liquidity has gone untouched. And so there's damage to do to the upside. And so we have a sweep of sell side on the 50-minute. 50-minute bullish imbalance. Midpoint is being respected. Look to that point. Internal sweep right here as well. So we can get that IRL to ERL type of delivery, which also gives us the potential change in the state and this breaker forming as well. That's another entry you can utilize. So we look to see what price does to this point. And what do we have here? Here is your break of structure right here. Break of that minor swing high. And so you have that change in the state. You have that bullish breaker. And so this is classified as a break of structure in terms of this swing high, this alone. And so you might get a break of structure and not a change in the state. But in this case, you do have that change in the state. And so now steps 1, 2, 3, and 4 are met. And so we go to step 5 and say, okay, do we have an entry? And the answer is yes. Look at this gap and look where it lines up. We're in that discount of dealing range. And it's simultaneously aligned with this breaker right here in the discount of dealing range. And there's clear objectives on the lower time frame and higher time frame to the upside. And we get that 50-minute sweep of liquidity. And we get that 50-minute bullish imbalance respected. And so steps 1 to 5 now are met. And this is the one setup for life that I would take time and time again. And so let's see what price does. Look at all of this generated liquidity that price must come take out. You wait for the retest of this gap. There's my entry right here. And I would target the opposing liquidity. You can take partials at this equal high here, these equal highs here, and then ride the rest to this opposing liquidity. And so let's see what price does now to this point. Price comes, takes out all of this generated liquidity. I mean, this is an easy draw. This is a clear draw for price. That is as crystal clear as it comes. And then price goes to that buy side. So nearly 95 points, over a 3-to-1 risk to reward, using that one setup for life that I would utilize time and time again that occurs in the markets all day. And so if I had to pick a setup, I would go with this one every single day. It's rooted in sound logic. These setups form very often, and given the proper objectives, given the proper analysis, you can see lots of success with it. So I hope you found this insightful. I hope you learned something. I wish you good luck at trading. And that's my one setup for life. Take care, everybody.